Are you ready to unleash your full potential and become unstoppable in your success and leadership?
Welcome to the Unleashed and Unstoppable podcast, where we provide powerful insights and strategies for coaches, corporate leaders, and entrepreneurs. I'm Alexanne Carter.
And I'm Carol Register, and we're certified master neurocoaches who are passionate about helping you overcome your limiting beliefs and optimize your performance.
Each week, we'll be sharing actionable tips and strategies using neuroscience, from interviews with industry experts to solo episodes, to help you lead a life of power, purpose, and possibility on your own terms.
Join our community of like-minded individuals. Hit subscribe now, and let's be unleashed and unstoppable together. Hey there. Hi there. I am so happy to be here with you again this week. I am bringing you another fabulous guest. As you know, Alex, Leanne, and I discuss all things leadership, wealth, neuroscience, and particularly about how your wealth building journey can happen through the way you create your reality and all the things we get to do in the neuroscience realm there. Today, I am so excited to welcome Jason Nightingale. He's going to give us some of the strategy, and I know he's well aware of the mindset around this because he's been doing what he does for quite some time. I am so excited and happy to have you, Jason, and I can't wait for you to share with our listener exactly what they can do to build their wealth. So is it okay if we start with some questions? And I'd love to know a little bit about you. Would you intro yourself?
Thank you, Carol. It's been awesome to be able to be here with you today. And anyway, so I live up in Idaho. I actually live 38 miles from the nearest stoplight, 68 miles from a Walmart, and 3 hours from an airport in the middle of north central Idaho.
I love
but in
it.
2015, I had a fire that burned down my other business, which was a wood shop. I built custom kitchen cabinets.
Wow.
And when that fire occurred and burnt that business down, I lost 5 digits monthly cash flow.
Wow.
So I really had to do something. And I really started thinking about banking, because when my bank would not give me back money that I had paid extra on my mortgage, it a little bit pissed me off.
Yeah.
But what I didn't realize is amortization, money only moves one direction. So, Carol, if you went and put extra money on your house or car today, you couldn't ask for that back.
Mm-hmm.
But there is lending situations where money moves both directions, just like a credit card.
Yeah.
So I thought, you know what? I need to change the way I'm lending. I need to go get a big equity line on my house. And that way, if I put extra on my house, I can draw it back if I need it. And I started Googling some things because, my bank would hold my clients' checks for 7 to 10 days and say, oh, we'll let you know when they clear. Well, that's a bunch of hooey too, because clients don't write bad checks. And second of all, they could call that bank with that routing number and have those funds available.
Yeah.
So what I did is I developed a banking strategy for myself, and I took my 14-year mortgage out in 30 months. And
Wow.
basically my wife's like, well, when are you going to start telling people about what you're doing? That's pretty cool. You're going to start sharing. I didn't realize that little voice, hey, maybe you should teach this in your business. So I started teaching it in my business. And Carol, within 22 months, and this business here, Safe Money Solutions, I've had for about 12 years. And it's a finance and insurance business. It was only part-time before that fire. But I had to go full-time after losing the other business. And what made it explode was that banking strategy I started sharing. And now, even though I live out in the country, I got a webcam, and I had clients in the first 22 months. I got 1,500 of them.
That's amazing.
$3 worth of coaching plans.
Wow.
And since then, we have 3,500. I started traveling to family office club events all over the country. That's where I met you in Florida in the Diplomat when you were there for a Grant Cardone meeting or whatever it was. And I was there for the family office club meeting. That's what I was doing, was I had a booth at that teaching high net worth people tax strategies.
Yeah.
And so what Safe Money Solutions is all about is finding insurance solutions and financial banking strategies to help people go further, faster financially, instead of just parking money in a dead checking and savings account.
I absolutely love this. This is one of the principles of wealth that I teach inside my program is bank on yourself, because the solutions that we have available to us are amazing. And the way that wealthy think is different from the way we were taught. And it sounds like you've totally tapped into this. I'd love to know, how exactly do you help business owners?
So you just touched on it, and you talked about bank on yourself. So
Yeah.
we do velocity banking as a checking and infinite banking as a savings, and we manage all that inside of an algorithm based software that won the Ernst and Young Award. So we have a
Wow.
perfect trifecta: something from the banking world, something from the insurance world, and something from the fintech world. And
Yeah.
so basically, businesses have a lot of needs with cash flow, with tax mitigation, with risk mitigation, with expense reduction. And we help in all of those areas. And let me give you an example. A lady referred me to a financial firm that was buying an airport in Pennsylvania. The airport was going to cost them 50 million. With our plan, where we did a buy sell agreement, basically a cross purchase agreement, where the sellers and buyers insure one another, we helped the buyer look better to the bank with their proposal, which brought the rate of interest way down. It made
Wow.
the seller more comfortable with the buyer because there was an insurance component. It made the beneficiaries of the seller have some hope that dad was going to leave them some money when he sold the business, because they had
Yeah.
had a job before. So we
Wow.
structured 10-year period certain pension payouts to all the children. We saved 2.8 million on the financing to the buyer. We set up a way for the seller to not have to pay capital gains tax on the sale. So
Wow.
we basically helped everybody involved. And then the bank loves us because we bring it to the table with cash value life insurance, which, by the way, was invented for banks way back in the 1800s.
That's so interesting. I'd love for you to touch on that. But, you know, why would someone even want to hear about that? I mean, I don't have a family office, let's say, but I'm a very successful entrepreneur and business owner. So tell me more about how this is going to be in my realm, because I'm not buying an airport right now.
Right, right. Okay, so everybody has to pay taxes.
Yeah.
And the last time I checked, most people, there's only two things that keep them up at night, and that's their children, and they'd rather throw a gold bar in the ocean than write another check to the Internal Revenue Service. And so we show people how to structure their finances where they don't have to do that. And
Mhm.
another thing, when you talk about cash flow, let's
Yeah.
say you were a real estate investor.
Yeah.
And, there's times when cash flow can be an issue, and you're trying to make sure that your investments are bringing you a rate of return. We
Yes,
show people
definitely.
using velocity banking how to attain more assets quicker, and using infinite banking how to keep those assets tax free. And when you use those in conjunction with 1031 exchanges in the real estate realm, it's really a trifecta that can't be beat.
Yeah.
We show people who, if they're just making $2,000 more than they're spending, they can be a millionaire in 10 years using that trifecta. It's
That's
absolutely amazing.
amazing.
And we teach that in our master class, where
Wow.
we teach these strategies to people that really want to get ahead with their wealth.
That is super exciting. I like the way you use the word trifecta too, and putting these systems together, the two different types of banking, the infinite banking, and what was the name of the other one you
Velocity
mentioned?
banking.
Velocity banking. And this is the first introduction I have had to those two names in a bank on yourself type system. And, having it, like you said, with a 1031 exchange, and being able to produce assets quickly, this is really exciting. And I'd love to know, what other services do you provide? And I know it's Safe Money Solutions is the system that you're putting together. Yeah, what else do you do?
Yeah. So when I started out, we were just doing insurance stuff. So I realized very quickly just doing the life insurance and annuities was
Yeah.
not going to be enough, because when people would come to me with their fact finders, they would say, "Can you help me with my home and auto insurance? Can you help me with my health insurance or my Medicare?" Well, let's face it, nobody can wear all those hats.
Yeah.
So when I started networking, before we did all this Zoom stuff, right? Pre-COVID, I met people at events when I would travel the nation, and I basically got pros in my corner so that I could help my clients with all lines of insurance. So
Mhm.
insurance is primarily what my Jason Nightingale agency side does. Safe Money Solutions is a fee-based company that teaches financial strategy, using the tools that Jason Nightingale Agency offers. So we are two sister companies working together. So when people come to us, they want to know how to mitigate risk or how to get all their money out of their tax deferred IRA. I see people that have, Carol, $1 million, $2 million, $4 million in a tax deferred IRA.
Yeah.
Can you imagine what a ticking time bomb that's going to be now that our federal government is spending money off the charts?
Yeah.
During COVID, they printed 27% more money than was even in existence since 1860.
Yes.
So ask yourself this question. Do you think taxes are going to go up or down?
I know what is going up. Every time I walk into the grocery store, that value of the dollar has gone down drastically, right? And everything is costing more. And, we could see the handwriting on the wall. Now, listener, if this is all new to you, it's okay. Take a deep breath. I want you to know that the reason we're bringing this information to you is because there are solid solutions for you. And I just want to wind back for a second. Will you, for our listener who has no clue about what a bank on yourself type insurance policy is, will you give a description of that?
You bet. You bet. So you've heard people say buy term and invest the difference, whole life sucks. Now, don't ask me where that comes from, but I was the director of life insurance for a financial distribution platform, and I have a pretty good idea.
Yeah.
So one of the top financial men in the union, in the nation, came from A.L. Williams, and he doesn't know the first thing about a dividend paying whole life company. It just so happens these companies, when they make a profit, they pay a dividend. And they have paid dividends for over 100 to 150 years. They never miss a beat. Yeah. So what's cool about that is, when you buy a life insurance policy, you can buy a term policy, but that's like renting a house. If you don't die, you lose all the money you invested. In a cash value life policy, you're able to get back all of the money in 6 to 10 years that you put in. It's fantastic. So you technically get your insurance for free. It just so happens, Carol, because it was invented for banks, there's a certain tax benefit that goes back into the 1800s with it. And you can maximum fund it up to a certain speed limit that the IRS sets, called the MEC limit or modified endowment contract. And when you overfund a policy, think of it like an investment. You want to put as much as you can into an investment. So when you borrow back from this policy, the reason that you're borrowing against the policy is this. If you take a partial surrender from the policy or a forfeiture, that could be taxable. But we loan against the policy, and let me explain how that works. The death benefit, or the large amount in the policy, is considered the lien on the loan. That's what they use to against the loan as collateral. Okay. The cash that you've built up works just like equity in your house. When you pay principal on your home, you build equity in the house. Yeah. That cash value is your credit limit. That's what you can loan against, up to 90% of that. So when you take a loan from the policy, you're not borrowing from the policy, but against it. And a special thing happens. The Rockefellers, and What Would the Rockefellers Do, by, I believe, Garrett Gunderson. Yeah. That book's amazing. And it talks about how if they borrowed for a bike, they could buy a motorcycle. If they paid their motorcycle back, they could buy a house. These guys were house homeowners by the time they graduate, these Rockefeller children. Yeah. And so let me give you an example. If you borrowed $30,000 out of an account with $100,000 in it, anywhere in the world, you name the asset, how much do you have left growing? $70,000. That's just math. But with cash value life insurance, Carol, because the death benefit satisfies the loan and you don't have to pay it back. But if you do, a special thing happens. So let's put some numbers to it. If you borrowed the $30,000 from the bank at 6% for 5 years, buying your kid a car, you're going to pay back $34,799. That's just the math.
Right.
But when you do that in a life insurance policy and put it back at 6% dividend, 6% loan rate, you'd think you didn't make nothing. But because you don't lose your place in line, it's as if you never took the money out in the beginning. There's 10,558 new dollars waiting for you. So why is infinite banking so powerful? Well, would you rather make $5,500 on that $30,000 loan, or would you rather pay $4,800 for it?
So let me ask a question. Okay, so the principal's protected. The principal is being invested and earning money while you're loaning against it. Is that it? Is that what I'm understanding?
It never leaves its growing power. You're loaning against it, but it's not losing its place.
Right. That's what when I heard first was introduced to these years ago, I was like, say what? What? It's amazing. And, it's something that I think when we know the tools that we have available to us that can assist us with building our wealth that have been around for a long time. I love the book by Garrett on the Rockefellers versus was it the Waldorfs who did not set up a system to protect their kids, and their kids went through it, whereas the Rockefellers are still successful today, and not only successful, but giving multiple millions away in charity every year. This is so incredible. And so you mentioned when you were talking about the way your two businesses communicate and work together, with the insurance agency side with giving all the products, and then the financial side that works together with the insurance side. Did I get that right?
Yeah.
That you have these insurance products available, and so when we're looking at what this does, what a bank on yourself type policy does alongside having the insurance that we need, how does this help us with planning?
Well, you remember when I mentioned the trifecta?
Yeah.
So with the
And the Roth, or was it the IRA? Sorry. Yeah.
If your listeners are listening and they Google velocity banking, there's a lot of stuff on YouTube and online about it. There's a lot of people teaching that. And then if they Google infinite banking, there's a lot of people teaching that. I just don't know anybody that combines them.
Yeah.
When you combine them, it costs about $3,800 in interest for every $50,000 in wealth you want to create. Because when you use velocity banking to fund your infinite banking, an amazing thing happens. So when I help farms, they have oftentimes like a $500,000 operating note.
Yeah.
And I show them how to just up their operating note to 550, which costs $3,800 on average for that extra 50,000, and put it into a 10 million, let's say a $10 million life insurance policy, 50,000 a year for 10 years. They now have 500,000 of tax-free capital that only cost them 38,000. So my question to the farm was, if you could buy bulls for 38,000 and sell them for $500,000 tax-free 10 years later, guaranteed, how many would you buy? And they all say the same thing. I'd fill my whole ranch with cattle like that.
Right.
This is a way to have the best of the banking and insurance world. And that's why I welded the two together. And the reason we put it inside that software is because not everybody wants to read all the books Jason read. Not everybody wants to spend all the time on YouTube. Have an automatic transmission. And for the gearheads that really want to learn it and how to get wealthy with it, they can come to our masterclass. So we kind of cover all those bases, so we can help all the way from the layman paying off a house, saving for retirement, clear up to a family office.
I love that. And, this is, even though I'm familiar with this, I am still gaining and discovering so much more right now. And listener, I really want to bring you hope about things that are available to you, particularly in this environment. And one of the things I do want to ask you about that I know from history is typically with these up and down cycles that happen in the market, with inflation, deflation, and all of these things that happen in our bigger economic picture. What I have seen across the board is that there's a lot of stability within these products. Would you just touch on that?
You bet. So the reason my business is called what it is, Safe Money Solutions, is because we believe in helping people de-risk. So the law of 100, if you're 50, half your investments should be in a no or low risk environment, right?
Yeah.
So we show people how there's many types of risks. You've got the volatility of the market. Like you said, you've got deflation or inflation, but you also have taxes. A 401k or a tax deferred IRA can be eaten up halfway if taxes go to 50%. This is the reason Ronald Reagan would only make 2 movies back when he was in the highest tax bracket at 90% near the World War II, because the third movie, most of the money would go to the government, so he wouldn't do that.
Wow.
And taxes could go there again with the spending that they're doing.
Yeah.
And so a lot of what we do here is trying to help people de-risk and lower their tax footprint, build their cash flow, and learn how to think for themselves, become their own banker, and learn how to use the bank as a tool to get ahead and not bless the bank. Because guess what? Whatever you went to bed last night was sitting in your checking and savings account. Congratulations, you just gave your bank a free loan.
Yeah.
And so we teach people not to let that money sit idle because it's not blessing you, it's blessing them.
Yeah,
So it's
that's
kind of
right.
a full ecosystem as far as planning. What's the definition of a budget? Telling your money where to go so you don't have to worry where it went when it's gone.
Yeah.
Same with an estate plan, telling your money where to go when you're gone so that it accomplishes your wishes. And we do
Yeah.
things with trusts, domestic or offshore,
I
so that
love
people
that.
put that layer of protection between them and the creditor. Because what's an attorney looking for when he's coming after somebody? Somebody with deep pockets. But
That's
somebody
right.
with a trust, their pockets are empty. I'm
That's
just a
right.
signer on the account. I don't own anything. So the case is dropped and you're protected.
That's another one of my principles of wealth. Use a trust. It's
Yep.
something as you're very familiar with family offices, those who are wealthy. And if I'm speaking to you, you know this, that trust is the way to go. And having somebody like Jason alongside of you who knows how to take what you have in that trust and really put it to work to maximize it is a big part of one of the mistakes I made in my journey. I had the trust and I didn't have the vehicles in place. And as I began to put vehicles in place, boy, oh boy, did I make a lot of mistakes along the way. That's one of the reasons those mistakes are valuable, right? First
As long as
attempt
you
at
learn. Yep.
learning, very valuable. So I don't regret any of it. It's all been for me. But, like you were just saying a minute ago, rather than have you listener go read all the books that Jason has read or experience the wealth journey that I've experienced, there are ways that you can avoid those mistakes by learning from us. And I am loving this conversation. So you also mentioned something. Now, Alex Leanne, she works in corporate and corporate leadership. And you mentioned something earlier about rewarding employees and about key executives. I'd love to hear what you have to say on that.
You bet. You bet. So, in this economic time that we find ourselves in, oftentimes it can be very tempting for one of your key executives or employees to go to another company.
Yeah.
It's just the truth of the matter. And so one of the things that you can do is there are certain tax benefits where that you can go to that employee and you can say, hey, Tom, Susie, I'd like to really keep you here. You're very valuable to the company. And I'd like to put this special life insurance policy on you worth $5 million that's going to have, say, 750,000 in cash value sitting in
Yeah.
it 10 years from now. All you have to do is give me your word you're going to stay here. And then they're vested. They sign this agreement. You do this. You can call that a golden handcuff policy. You can also call it a key man life if you're putting a policy on somebody, because if they were to pass away, it could mean a detriment to your company. Just so you know, banks buy more of this insurance than anyone else. 35 to 40% of banks' tier one capital is cash value life insurance. People do not realize that.
No,
and so
definitely
it doesn't suck. Banks buy it.
Yeah.
It's just people don't understand it. And
That's
so
true.
the beautiful thing the funny thing about that is, first, Walmart buys more than anybody. You want to know why? Because they turn over employees every 2 years. But if they put policies on these people, they can take tax-free loans against those policies until that vesting is up. And they can, as long as they put all that money back, there's actually a tax provision, Carol, where you can take and you could borrow money from your trust, let's say, at this rate and pay it back at a federal rate. And there's no income has to be claimed, not even on a FAFSA report, the difference between the lower rate and the federal rate.
Wow.
You actually make money tax-free, and it's not even counted as income because you can legally pay back your loans at a fair interest rate.
That's amazing. And, it's so interesting, again, to talk to an expert like you who can see all of these different facets and bring them to the table and help us to make great decisions with our wealth. And, to be able to Well, do these key executive type policies are they done on joint ventures, I'm sure, as well, right?
You
Where
bet, you bet. And those premiums that you're paying in, not only are they tax deductible,
yeah.
but that business owner can borrow up to 90% of that money right back out. So it
Wow.
doesn't affect their bottom line of their cash flow, just as long as they meet their end of the vesting schedule and they put all the cash back into the policy by the time the employee is to inherit the plan.
That's a really amazing way to go. And so, if you're out there with a joint venture, this is something to absolutely consider. And you also have spoken in the past about being attractive to a bank. How is this attractive to a bank?
Are you talking about how is cash value life insurance attractive to a bank?
Yeah, exactly. Yeah,
Okay, so banks deal in money. When you put your money in your checking account, it doesn't stay there. They move it several times.
they invest
And we
it.
have what we call
Yeah,
fractional reserve banking, and that means they can loan your money out up to 9 times.
yeah.
During COVID, they removed that and it became no reserve banking.
I didn't know that.
They can loan
Wow.
your money as much as they want.
Wow.
The feds took the cap off of that. And I don't
Wow.
know if they've ever put that back on. That's kind of sad. But with
Wow.
cash value life insurance, banks love it for the same reason that execs do, because they can put this on their key people
Wow.
and they can borrow against that money and go out and invest in other derivatives or other investments on the market. And when they
Wow.
make that rate of return, they can put that I know so money back. Just like I was talking about earlier with safe money solutions, we believe in having that I know so money. And we show people whether your investment style is real estate, silver and gold, stock market, crypto, real estate, it doesn't matter what your investment style is.
Yeah.
You can put that money back in that policy
Yeah.
and not have to count those gains as income and keep leveraging those same funds over and over. So it's not, I wouldn't call cash value life insurance like an investment vehicle as much as I would a banking tool. It's
Yeah.
a tool to make all your other investments work better, to have
Mhm.
a source of your money that is there all the time, that you're constantly taking it out, putting it back. And that's why banks like it. And like I said,
Okay.
35 to 40% of their tier one capital is cash value life insurance of many, many big banks.
That's amazing. Yeah, and that's so helpful to understand um, you know, the way to use this tool. Now, I know that once you have a bank on your self policy, you can take a loan against it and you can put the principal to work as well. Is that correct? And you
That's
did mention
correct.
annuities.
It's very important to get the right advisor, because I'll be the first to tell you that a lot of people get into different lines of work and they're commission centric and they just don't tell. Here's the travesty: 80% of people, Carol, that own cash value life insurance policies, the carriers tell me 80% have never taken a loan. Well, that's like buying a Lamborghini and never knowing that it has 6 gears or whatever. You never drive
Yeah.
it right. And then 70% who do never pay it back. And then you don't get the arbitrage. So having the right advisor to show you how to use this tool that you now have is very important. Can anybody go do velocity banking? You bet. Your bank may hate you and may freeze up your account, though. Can
Mhm.
anybody go do infinite banking? You bet, but they may use the policy wrong. But with a
Mhm.
coach that not only can show you how to use both and together or separately, you
Yeah.
will make sure you have the right bank, you have the product set up the right way, and you're using it in the way it was intended.
I Again, I keep saying over and over, I love that. Guys, yes, I am repeating myself. Something I tend to do anyway. The news that Jason is bringing to us about having the right advisor, about knowing the different aspects of how to use one of these investment and banking tools. Just want to be clear on that because I like what you said about, really looking at that as a banking tool and then having, the resources to know exactly the best ways to use it. Like you said, what's the point of having a Lamborghini and have it sitting in the garage, right? Would you share with us what resources you do have available, workshops, books, tools that you have for us?
You bet, you bet. So I have a couple websites. I have safemoneyjason.com and I have your safemoneysolution.com. And on the second website I just mentioned, there is a free guide and there's also a video there's video on both websites. One's 7 minute, the Safe Money Jason. The one on your Safe Money Solution is probably 20 minutes. But I also teach a master class for anybody that's thinking, okay, it sounds like there's a lot of moving parts here and really wants to really kick it in high gear and learn it. We teach a master class. We have very limited availability for that. It is quite popular, but in that master class, basically what you get when you're done is you get a book given to you on velocity banking. You get a book on infinite banking, and then you get our course guide, and then you get a certificate of completion. That class lasts for 4 weeks, and people who become our clients actually get a discount on the class, and then they get unlimited coaching because we do annual review with them anyway. Some people just come to us, and we have no problem with that. They just want to learn from us and go, and we never hear from them again. That's normally not the case. Most people come to us, they learn it, and then they say, okay, now I'd like to get this infinite banking policy going, or I'd like to get my velocity banking going, or both. And especially people, of course, that have immediate debt, or if they're investing in some other real estate and they really want to pay it off quickly. As I mentioned earlier, how we teach people in our masterclass, how if they're making $2,000 more than they're spending, we can show them using our strategy with real estate, how to become a millionaire in 10 years. It's really not that hard, and it's just math.
That's so incredible. And, a lot of the clients that are coming to us, and if you're one of those listeners, I'm speaking to you, do have wealth and have gotten stuck along the way. And a big part of the work that I do is helping people to go back and heal their money stories, look at the limiting beliefs, those traumas, those limiting beliefs and money stories that have come in that are keeping people stuck in their obstacles, and being able to learn to think like the wealthy think, know those success clues as principles of wealth, combining that with working with somebody like you, Jason, who has all of these strategies and resources available to start to build your wealth in a way that is automatized, it's systematized, and it's an ongoing thing that is just happening, is super exciting. I do have one last question. I want to ask you, what happens if you're in a place where you are missing liquidity right now or ongoing cash flow? Can you still work with me in that situation?
You bet. You bet. Our average client gets back $2,000 per month the very first 30 days they meet with us. We offer a free discovery call, Carol, just for that reason. Okay. Everybody's different. When we go down through basically what we do, if they say, yeah, I'd like to delve into this a little further, we have a no obligation discovery call where we actually go down and gather some information from them, where we can put some professional ideas out on the table and get their feedback. And then if I just say, hey, where do you want to go from here? And they say, well, how do I work with you? We show them how they can work with us. Because people that don't have cash flow steady oftentimes have those assets available to them. They just don't know how to employ them. Mm-hmm. Or maybe those assets are available. They just don't know where to find them or how to run them if they did find them. Oftentimes people have read about infinite banking or they've read about velocity banking, but it kind of went, phew. Having a coach there to show you how it works with your specific situation to build that cash flow that you need is vital, and it's important. And everything we do is based in that algorithmic software. So it's just math. If we can't save you money, we don't charge you a dime.
That's amazing. That is so exciting. So how do we get in touch with you? Like you said, the two websites.
Yeah.
Are you on socials as well?
Yeah. LinkedIn is the main one.
Okay.
SafeMoneyJason.com has all my links. You can actually go down and see my business card from there that has all the links combined on it. But you can go on there, and my calendar's on there and everything, and people can schedule time with me. But SafeMoneyJason.com is what I would say is be the best place for someone to do that.
Awesome. Okay. Thank you. Thank you again for being here. And listener, I am excited to bring you this information. I'm excited for you to know what's available to you and find out, by getting on a call with Jason, figure out if this is meant for you and a tool that you can use to build your wealth and will keep discussing moving out of the way of any of those limiting beliefs that are making you think that, you can't have the amazing life that you are meant to have. So I'm so excited to be here. See you next week. Ciao for now.
Thanks for tuning in to another episode of the Unleashed Unstoppable podcast with your hosts, Alexandra Carter and Carol Register.
If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review, and subscribe.
That's all for this episode, Wildly Ambitious Leaders. See you next week.